The dollar's plunge. Trump's tariff tsunami shakes global markets. Thursday witnessed a seismic shift in the global economic landscape, sending shockwaves through financial markets and leaving investors reeling. The catalyst? President Trump's audacious announcement of sweeping new tariffs targeting some of the U.S.'s largest and even some surprisingly uninhabited trading partners. The dollar plummeted to a 6-month low, reflecting the deep uncertainty and apprehension gripping the market. This isn't just a minor trade adjustment, it's a full-scale assault on the established global trading order. The White House's proposed tariff list reads like a who's who of international commerce, including the European Union, China, Japan, and Taiwan. These nations, along with others, face tariffs exceeding 20%, a dramatic escalation that promises to reshape the global economic playing field. The impact will be swift and brutal. A 10% baseline tariff kicks in on April 5th, followed by reciprocal tariffs on April 9th. This isn't simply a theoretical exercise. Economists have been sounding the alarm for months, warning of the potentially devastating consequences of such aggressive protectionist measures. The consensus: high tariffs are a recipe for disaster, igniting inflation, disrupting supply chains, and jeopardizing the U.S.'s position as a global economic leader. The consequences will be felt acutely by American consumers. Prepare for sticker shock. The price of everyday goods, from automobiles to imported wines, will inevitably surge. This isn't just speculation. The impact on everyday Americans is likely to be substantial, with increased costs impacting household budgets across the country. The inflationary pressure alone poses a significant threat to economic stability and could trigger a downward spiral impacting a vast array of industries. The business community is already expressing deep concern. The Business Roundtable, a powerful lobbying group representing America's leading CEOs, issued a stark warning. Universal tariffs ranging from 10–50% run the risk of causing major harm to American manufacturers, workers, families, and exporters. Damage to the U.S. economy will increase the longer the tariffs are in place and may be exacerbated by retaliatory measures. Their concerns are echoed by the National Retail Federation, which anticipates significant negative impacts on the retail sector, potentially leading to job losses and reduced consumer spending. The National Association of Manufacturers, NAM, a significant voice for American industry, directly contradicts President Trump's claims that the tariffs will create jobs. Instead, the NAM argues that these tariffs threaten investment, jobs, supply chains, and in turn, America's ability to outcompete other nations and lead as the preeminent manufacturing superpower. This stark assessment paints a grim picture of the potential long-term consequences for American industry. The administration's gamble on tariffs isn't just facing opposition from businesses. Public opinion is decisively against it. A poll released just days before the announcement revealed that a mere 28% of Americans believe tariffs will benefit the economy, while a resounding 58% anticipate negative consequences. This significant disconnect between public opinion and the administration's policy underscores the political risk inherent in this strategy. The implications extend far beyond the immediate economic fallout. The imposition of these tariffs carries the potential to trigger a chain reaction of retaliatory measures from affected countries. This could escalate into a full-blown trade war, disrupting global supply chains and potentially leading to a significant global recession. The interconnected nature of the global economy means that the repercussions of this move will be felt far beyond U.S. borders. The uncertainty surrounding the long-term effects of these tariffs is palpable. Economists are grappling with predicting the full extent of the damage, as the interconnectedness of global markets makes it exceedingly difficult to isolate the impact of these specific measures. The potential for unforeseen consequences is high, adding another layer of risk to an already volatile situation. The administration's decision to proceed despite widespread opposition raises serious questions about its understanding of the intricate mechanisms of global trade and its disregard for the potential consequences for American businesses and workers. Beyond the immediate economic turmoil, the political ramifications are equally significant. The president's decision to proceed with such controversial tariffs despite widespread opposition is a bold gamble, potentially alienating key allies and jeopardizing vital relationships. The long-term political consequences of this decision remain to be seen, but it is clear that the fallout will be far-reaching. The plummeting dollar serves as a stark reminder of the market's skepticism. Investors are clearly signaling their apprehension about the potential for long-term economic damage, sending a powerful message to the administration. Whether this will influence future policy decisions remains to be seen, but the markets have clearly spoken, expressing their deep concern about the unprecedented scale and scope of these new tariffs. The coming months will be critical in assessing the full impact of this bold and potentially disastrous policy decision. The world watches with bated breath, bracing for the potentially devastating consequences of this economic earthquake. The future remains uncertain, but one thing is clear. Trump's tariff tsunami has already begun to reshape the global economic landscape.